Most buyers are told the first step in buying a home is to get pre-approved. And I actually think that's kind of backwards. Not because pre-approvals are bad by any means, they're a necessary part of the home buying experience. But when they happen first, before you define your own boundaries, they quietly create this pressure that just carries with you throughout the entire process. Let me explain. A pre-approval is essentially a lender's limit. It's just them saying, based on your income, debts, credit, and guidelines, this is the maximum we're willing to lend you. That's it. It's not a recommendation. It's not a financial plan. It's not a comfort measurement. It's a risk calculation based on underwriting formulas. Those formulas do not know how you want your life to feel after you move in, whether you value travel or flexibility, if you're planning to have kids, or if you're just someone that hates financial pressure. They calculate risk tolerance for the bank, not sustainability for you. And that distinction matters more than most people realize. To start, let's take a look at monthly income. Let's say you make $7,000 a month. For now, we're not going to get too far into the weeds on all the other existing expenses, but we'll come back to that in a second. So you make $7,000 a month, and now we'll add in the lender's pre-approval amount. In this case, let's say it's for a $550,000 loan with a monthly principal and interest payment of like $3,200. That's about 46% of your monthly income. That's not bad, right? You get a big, beautiful home with a $550,000 loan and still have $3,700 a month of your income left over. Well, it's not actually that nice. First off, the monthly income that lenders use to calculate these is pre-tax. So in reality, you're only seeing about $5,300 out of that $7,000 that makes it to your bank account. Now, if you take that $5,300 and subtract that monthly mortgage payment of $3,200, you're left with about $2,000 at the end of the month. That's what I call your budgetary bandwidth. But it doesn't stop there, because now you have to go in and subtract your bills, your groceries, your money for eating out, travel, gifts, savings. All of that stuff adds up fast, and the end result is that you're left with less and less financial breathing room in your bandwidth. The less bandwidth we have, the more pressure we live under. Life gets stressful and really doesn't de-stress itself. You can end up spending years and years under the constant pressure of not really having enough money to live a life that you're comfortable with. And here's the real risk. Let's say you get pre-approved at that $550, but maybe a more ideal loan amount would be $450. Well, now you've seen that $550 is quote unquote possible, so it kind of lodges itself in your brain and it becomes the ceiling. And just like a plant will grow to fill the pot it's in, our budget when shopping for a home usually tends to grow to meet the ceiling that we set, or that the lender sets for us. You know, realtors will start searching for a home up to that ceiling. You'll just kind of naturally start looking on Zillow to see what's out there, what's available at $550. Next, you're picturing yourself living in a home that costs $550, and suddenly you're not asking yourself what feels sustainable. You're asking yourself, how close to that line, to that ceiling can we get? And that's a very different question. This is exactly how people end up house rich and life poor. It's not because they were irresponsible necessarily. It's because they never spent the time ahead of going out and shopping to define their boundaries. They let somebody else set them for them, typically the lender. And they weren't informed on the right process before they started down their home buying journey. So here's the real question. Is there a way to buy that results in less pressure, something that gives you more of that budgetary bandwidth? Absolutely. Before you ever apply for a mortgage or even speak to a lender, I think there's 3 things that you should define for yourself. One of them is your payment comfort range. That's not your max, it's what you can actually live with. 2 is your realistic cash to close. How much money can you actually come up with to get into a home? And then 3 is your rent versus buy trade-off. What's the cost of changing the current status quo? Let's break all that down briefly. So payment comfort range, not what's the highest payment I can survive, but at what payment do I still feel calm, flexible, and able to live my life? That's usually below what a bank or a lender will actually approve you for. I highly encourage my clients to spend some time putting this on paper. It makes everything that happens in the buying process feel more manageable. You can read my Substack article on creating a safe buying box to learn how I recommend doing this. Cash to close window. Now this is not a rough guess, it's a defined range because cash surprises are where most buyers feel regret late in the process. They don't know that closing costs and cash to close are not the same thing and it can bite them in the butt. I have a calculator that can help with this where you can see the actual numbers and kind of project them out so you're not caught by surprise. There's a link for that down in the description. Rent versus buy delta, or a comparison of renting versus buying. What changes monthly? What changes long term? What are you actually trading? At exactly what point does buying this home become more profitable than continuing to rent? It helps a lot to see this mapped out over a 5, 10, or 15-year horizon. I've also got a tool that can help with this. Again, the link for that's down in the description. When you define these 3 things first, something shifts mentally. Now the pre-approval becomes a confirmation tool, not a decision driver. You already know your boundaries because you set them. You're in control. The bank is just checking whether your boundaries fit inside of theirs. That's a completely different emotional experience. Pre-approval isn't the enemy. It's just out of order most of the time. Boundaries first, approval second. When buyers control the process, they feel steady and calm. And a steady buyer makes better decisions. If you want the full framework for how I teach this to my clients, I've laid it out in detail in the Safe Buying Box piece on my Substack. You can also find a link to that on my website. There's one in the description down below. It's designed to make this process calmer and more structured for anybody, no matter where you're at in the process. And if you're someone that wants structure before you make a big financial decision, like buying a home, this is the channel built for you. So subscribe to make sure you don't miss the next framework that we release. And if something in this video raised a question for you, drop it in the comments and I'll respond. And if you'd like help with your specific scenario, happy to talk to you. You can go to my website and click the schedule a call button and throw something on my calendar. Until then, take care.